Hello, and welcome to Explain the Charts. Today, May 4th, 2025, we're analyzing USDJPY, combining recent news and candlestick chart analysis for a detailed market overview. Let's start with the latest news. Reports indicate ongoing discussions between the US and Japan concerning trade tariffs, as well as speculation that Japan will not threaten to sell US treasuries in trade talks. This suggests a potential easing of trade tensions, which could positively influence market sentiment. However, mixed signals persist, creating uncertainty. Recent reports indicate the Japanese yen has appreciated nearly 1% against the US dollar, which introduces a bearish bias in the movement of US dollar to Japanese yen. Analysts are noting sticky inflation in Japan, and this is putting pressure on the BOJ to normalize policy, so we'll have to watch out for that. Several sources expect the Bank of Japan to maintain current interest rates due to economic fragility caused by potential US tariffs. Now, let's move to the charts. We'll begin with the daily chart to identify long-term trends, and then zoom in on the 1-hour chart and 15-minute chart for finer details. Looking at the daily chart, we can see price action fluctuations, as well as see the larger trends that we can confirm or deny in the shorter timeframes. There seems to be strong resistance in the 160 range. Looking at the more recent data, it's bouncing between 140 and 160. Let's narrow into the period between November 2024 and February 2025 to understand the trend in the recent months. This could help us get a more granular view as to what might happen short-term. Zooming in on that range of candles, November 2024 to February 2025, we can observe a strong support level forming around 150. However, it failed to hold in late July 2024. From late July 2024 to mid-August 2024, it crashed through the 150 level. This crash is confirmed by the high volume of the candles. Now let's take a look at the 1-hour chart to confirm. Looking at the 1-hour chart from April 14th to April 16th, there's strong indecision. The candlesticks are short, meaning there wasn't a huge shift in price throughout the day. In this range, support and resistance levels are difficult to determine, but we know the short term is indecisive right now. We should look for more volatility in the coming days to know more. Let's look at the 15-minute chart from April 29th to April 30th. It shows very little volatility, so this indecision is still persisting from April 14th to 16th. In summary, keep an eye on the 150 support level. If it breaks again, expect a downward move. If it holds, a potential rally could target 160. Monitor trade talk developments and any BOJ or Federal Reserve announcements, as these will likely be the catalysts to break the current indecision. To recap, key price levels to watch are 150 support and 160 resistance. A sustained break below 150 would likely trigger further bearish movement, potentially towards the mid-140s or even lower. Conversely, holding above 150 could signal a potential rally, targeting the 160 resistance. I'd wager this consolidation will continue at least until tomorrow, as it's hard to know short-term, with about a 40% chance of either happening. A true bullish or bearish bias shift will be revealed after further trade talk development news.